Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action and what we think might be happening next. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, consider subscribing. If you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and it is the first place that we go to notify you of everything that is going on in the crypto space. So keep a finger on the pulse of crypto by joining us in Discord. Let's make a start with this one, right? So I think we're going to probably start off by taking a look at Elliott wave theory, then we'll jump on into smart money concepts and take a look at the macro picture and give you a bit of an idea of what is going on. And so let's go and make a start with this thing, right? So if I just zoom out of this hourly chart here, this is also on Tether, paired with Tether, I should say, and Binance is our data source. Okay, so we can kind of zoom out of this. We can kind of see a lot of various different things that are going on here. And all of this is inside a W wave. Now, this particular area is of interest to me because it could be a couple of different things that are occurring here. This W wave could be a number of different moves, but also this little area right up here, as I was talking about yesterday, is also very, very interesting to me. So what we're going to do is we're going to try to figure out what is going on from an Elliott wave theory point of view with this particular structure here. A lot of people will want to kind of look at this thing and think it is impulsive, but straight off the bat, by just taking a look down at this little area here, this theoretical, what people might call wave one, is not actually a wave one. And the reason for this, it doesn't look like we have enough of a movement in here to actually constitute a 5-wave structure, right? Not even a diagonal would fit into that area. So this looks like 3 waves to me. We can quite easily see we go up, come down, and then we just go up again, okay? And if I go ahead and measure the distances on this, using a Fibonacci retracement tool, we can see here that we basically just pierce up a little bit higher than the 1.272, but not up to the 1.382. So we know that we're kind of finding resistance. We're not hitting anywhere near that 1.618 within this area. So we know it's all corrective. There's no way that's even remotely possible to even be a wave 3 at this point. Now, up here, we can see that we do move down a little bit. We kind of have our 3-wave structure coming down here. And then we start to get into this really interesting zone as well. Okay, again, a lot of people will kind of want to try to make something fit into here, and it doesn't look like anything can fit into this one either. Let's go ahead and just zoom in here. Okay, so if we go ahead and measure this one candle here, just to this bottom, so basically we're just measuring this one candle. We move this over to that retracement zone right here. We can see that again we have this high hitting that 1.272 right on this area here, right? We can see it right. This top is basically 1.272. So we know that it again is not following any of the rules for a 5-wave structure. So again, we can just mark this up as 3 waves in itself. Okay, so then we end up with this string of corrections. We can also quite easily see that there's a correction to the downside over here. Can quickly do that one, nothing major there. And then up here, we actually then start to see some progression upwards. And I think we've got a couple of different ways of looking at this. Because we have this really nice tight run up here, we kind of might want to think of this as 1, 2, 3, 4, and then 5. But then we start to see all of these areas kind of changing the structured point as well. So we probably have an extended 5th wave at some point in here, but it does look like 5 waves altogether. Now, why is this all important? This is all important because we do not have a good wave 1. We cannot go and do something like this. 1, 2, 3, 4. We're going to the moon 5, right? That just doesn't simply work, at least from an Elliott wave theory point of view. If you're not going to apply the rules of Elliott wave theory, there's simply no point in Elliott wave theory, right? It is a rule-based strategy where you can kind of apply the rules and you can get future predictions on price action based on the movement and psychology of people reacting to price movement. So when you're not applying the rules properly, there's no point in actually looking at Elliott wave theory. You have to apply the rules as they are written. And there's a set of principles behind those rules that basically mean that there's always a wave somewhere in the price action. And waves can change. They can start off as impulsive moves, as in you do go 1, 2, 3, and wave 4 creates an invalidation because the behavior of people behind the actual movement in price has changed. The behavior has changed. The behavior might change because of news-based stuff. It could change because of some kind of black swan event. It could change for many different reasons, but ultimately we're given the highest probability based on the structures that are there if you follow the rules. So when we do not have any way of kind of looking at this area down here as an impulsive structure, the only positive that we could potentially even kind of write in here is that we end up with some kind of diagonal, and it's a much bigger movement than we can even see. But we'll kind of park that for now because this area here could be a multiple different things. So as we kind of see down here, we do have this interesting kind of structure. We kind of have this little 1, 2, 3, 4, and then 5 here. Quick correction coming down 1, 2, 3, 4, and then up here into 5. So it looks like to me this is actually a zigzag pattern, and I don't think we've actually gone ahead and hit those requirements for making this also an impulsive. You can see right in here. Actually, no, to be fair, we did. So to be fair, credit where credit is due, we have gone past the 1.618. So the next move is going to be important. Okay, so let's go ahead and jump into this. Okay, so right down here at this low point, we can see, let me draw these in, right? We go kind of 1, 2, and I think we're going to have to go, 3, 4, and overextended 5, like that, okay? Then we have a correction to the downside here, 1, 2, and 3. And then up here, we also have a very interesting structure, 1, 2, 3, 4, and then up here into this 5th wave. Now, this 5th wave, I think, is an expanding, and we'd have to go 1, 2, little 3, down 4, and up in 5. But we'll do the sense checks on that as well, right in here, because it's important that we actually make sure that we follow these rules properly. Okay, so if we do this, and we can see that we did not hit 1.618. So the only way that that would work is this is a diagonal that is of an expanding variety, which is actually quite easy to kind of illustrate because we had that big surge at the end. Okay, so I'll go ahead and draw this in, and I'll pull that to the upside there. You can see this. Now, this particular type of diagonal basically has a couple of rules associated with it. You have a wave 1, a wave 2, a wave 3, a wave 4, and then that final 5th wave. Okay, the 5th wave has to be the longest. The wave 3 cannot be the shortest. Okay, you do have overlap with wave 4 and wave 1, but wave 4 is not allowed to retrace deeper than the wave 2 peak down here. Okay, so looking at this is a perfect wave 5 situation. Perfect wave 5 situation under the expanding diagonal concept. So as I kind of pull this back down, what does that mean? Well, it means that we have a little 1, 2, 3, 4, 5. Okay, now what do we see here? Well, we straight off the bat, we hit that 1.618 by coming up into that diagonal there. Okay, so we can look at this as a 1, 2, 3 situation, with this being a 4th and then still got that 5th. Okay, but we cannot take away from the fact that we have a 3, 3, 3, 3 area, so we have all these corrections down at the bottom. Okay, so it's an interesting structure. Now, ultimately, I think this on this side here is a part of a bigger corrective play, and it ends in 5 waves. And I think that's what this is going on. This is an ending move of 5 waves. Okay, so we'll get into that in a second. So as I come back down into this, what is the likely play when it comes to our recent price action? So from our recent price action, if I were to draw this in, I think the next move has to be upwards just a fraction, probably 25,400. I'll mark a little yellow box on here actually, 25,400 up towards 25,677. Okay, that will be right in there. Okay, this would then basically be a little move. Actually, it could be a little bit different. We might have to come down before we go up. I'll leave it there for now. The reason that looking at that, we have this little kind of structure right there. We actually might have to see a little bit of a move down and then a bit of a move upwards. Let's go ahead and run on the principle that we do that. Then we'll be looking at 24.4 and then upwards. So if we do 24.4, then we go up, we would be... we'll be right in the zone. I'm going to leave the zone where it is for now. I don't want to kind of make this too complicated. I'll try to just kind of keep this as simple as I can. But essentially, it looks like we do something to this effect. We come up into this little range here. Could be a little bit different, but it's going to be in and around this range, I would have thought. 25,400, 25,600 approximately. Possibly a little bit higher, 25,700 maybe. Ultimately, the concern here is that this wave 4 is not yet complete. And we haven't got a trend upwards right yet. So we'll be looking at this correction down. Now, the move to the downside is also of interest to me, and it's of interest to me because there's an invalidation from this impulsive structure to convert this, that would basically convert this idea of an impulsive structure with this 5th wave that goes up higher into a zigzag pattern where it's done and complete up here and we do not go any higher. Now, the reason that this is a problem or a potential interest of me is basically this area here. We can see we have 5 waves. Now, I'm going to do some sense checks on that. I'm going to snap this to that wick there. We're going to pull this up here. And I know I'm going really fast, guys. I've got a lot to cover in this video, and if you're looking for more information on Elliott wave theory, check out 𝗕𝗘𝗪𝗏.com, linked in the description down below. I put together a whole course on Elliott wave theory. Yeah, we hit that level. When I go through all the kind of the rules and the details of it. So this here is 5 waves. So 1, 2, kind of 3, 4, and 5. Okay, now this is a problem. Let me actually go ahead and clear out this larger move for a second. And in fact, I'll probably remove a lot of these other noisy areas just so we can focus in on this little one. We've come down in 5, right? Now, if you start with 5 waves, you have to end in 5 waves. So if we do go ahead and finish off this structure up here, then the next expectation is going to be 5 waves down. 1, 2, 3, 4, and 5. Okay, and we'll either end up with this corrective zigzag pattern, or we're going to go impulsive and we're going to cross the level of 22,600. If we do cross down lower than the value of 22,600, then essentially what we're going to do is we're not going to have that impulsive move. We're not going to come up into that higher range, and all we're going to do is break down from here, and we'll probably fall into another structure. So we're going to keep that in mind, right? We've gone down in 5, we're going up in 3, we've got to probably come down in 5. Now, if I zoom out of this, we do have this higher range that we've been talking about for a while. Again, it's not unusual. My biggest concern here overall is that maybe this is a bigger move overall. That is actually taking us into the territory of a flat correction, either irregular or running. Okay, and there's a couple of different ways of looking at that. So we're going to keep this in mind, that this area here is of interest to me, because what happens next, it's going to determine the future of BTC. Okay, at least from an Elliott wave theory point of view. Now, as I said, there's a lot of things to consider, a lot of rules when it comes to Elliott wave theory, and that's why I put together a course down at 𝗕𝗘𝗪𝗏.com in the description down below. You can trade you can trade Elliott wave theory once you kind of learn the rules behind it, and 𝗕𝗘𝗪𝗏 does that for you. Helps you understand the various different rules and the various different structures, and when to apply them, how to apply them, and how to trade them. Now, if you are looking at trading, why not use BitGet, linked in the description down below. They're offering some fantastic deals at the moment using the affiliate link in the description, where you deposit 50 USDT and you can get $10 cashback, USDT cashback on that initial deposit. Now, they also do deposit bonuses all the way up to $8,000 depending on how much you deposit, and a whole host of other tasks that you can do to complete to get fantastic offers and bonuses available. We also are running a competition with BitGet via our Discord server. It's a weekly competition that runs every single week, where you can win up to $100 USDT, and it is an ROI percentage based winner. So basically what that means is the person who has the best ROI percentage within the 7-day period will win the $100 USDT. So if that's of interest to you, why not sign up to BitGet, linked in the description down below. Join us down in Discord for more details on the trading competition. It's a reoccurring weekly competition that happens every single week, so why not take part if you're a fantastic trader? Using our link with BitGet down below, you'll be automatically entered into the competition when you have $500 in your margin account. Guys, check it out, linked in the description below. Let's jump over, though, into smart money concepts. Okay, so we have got a bit of a grasp over what we think is going on with Elliott wave theory. We should also reflect on what is going on with smart money concepts. So with smart money concepts here, we can see that we were bearish, 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 and basically we've now changed our characterization to bullish. Okay, so this is on the hourly chart, but also something I think is now reflected on the daily. No, we didn't get a daily change. I thought we did, but we closed below the level. So yeah, we actually did not get that move, which is interesting. So a lot of people were hyped about that yesterday. So yeah, we've got the bullish change on the hourly, but not the daily now. So we can see here that this basically means we've got the change of characterization. We should be thinking bullish movements. However, in order for us to kind of think about these things, we should reflect on the fact that natural pullbacks, natural corrections are due, and therefore moving down to equilibrium is something that we should probably consider. Now, we also have left behind these fair value gaps. These fair value gaps are created from imbalances in the order books. Basically, the price was down here. There was no one really selling in this little area here, for example. That price jumped up to that higher range. So this gap was left behind. Price likes these gaps, and it likes to come back down and refill these gaps, okay? So when you have big purchases going on and price jumps like this, it basically stops those big purchases occurring or reoccurring because price isn't really stable within those ranges. They're paying now more than they were maybe willing to pay. Prices jumped from those low areas to those high areas. So they stop buying and the price naturally cools back down and fills those gaps. Doesn't always fill them, but for the most part, they do generally like to do so. We can also note that equilibrium also falls right inside this area here for our fair value gap, this imbalance. So expectations are that we do move down into this range. Like I said, we started with 5. Chances are we're going to be going down into 5. And I do think we're going to see the invalidation as well around the impulsive structure to the upside. So again, we'll see how that kind of plays out. But ultimately, bullish at the moment, but I don't know how long this is going to last. So we're going to keep a close eye on that. This is a minor time frame. So again, we'll take it where we see it, and we can trade these as we would normally. So we'll be looking for break of structure next, but usually when we see a change of character, price cools off a little bit, and then we try to move up again, and we get the break of structure. The break of structure would only occur, though, when we actually start to move back up again after we set this week high at the moment. Okay, so this premium range right up here is a week high, which basically means we can go through it. And in order for us to kind of see that, we have to cool down, in my opinion, to equilibrium, then push up higher. So that will only get a break of structure, a confirmation of our bullish statement, if we go up higher than that week high at the moment. We all know where that high currently sits, I think, but I'll just say it here. It's $26,386. So that's what we're looking for. We do have a strong low at the moment, but again, we'll see whether or not we're going to change into a bearish state anytime soon. So we'll keep a close eye on that overall. So that's the hourly from a smart money concept. So let's actually just jump up into our daily, because our daily is of interest to me for a couple of reasons. One, we do have these fair value gaps down here, and two, we did have that change of character from our bearish state to our bullish state, okay, but we did not close where we needed to. So our close position was lower than the original high, which basically removes that characterization change. So we still stay in this bearish state on the daily chart, which is no surprise considering our stochastic is up in that overbought area. So we are looking for a pull to the downside overall. So ultimately, all of that's quite interesting. I do think we still have to come down into these fair value gaps. There's a few of these on the chart, and they are reasonably low. So we'll keep a close eye on those. Same with the weekly time frame. The weekly time frame right here, if I do throw on come back to this one. Let's go to this one. So this is our weekly time frame here. We can see that this area is of interest to us, 26,700 to 28,805. This is a previous area right over here where we found, okay, if I can pull it that way, that we found support on, we pushed up, and we fell through it. This is now a retest. So this retest of this area right here tells me that actually this is the most likely area now where we get rejected. Okay, was previously support. Is it now going to be resistance? Based on the stochastic RSI and momentum behind the price right here, yeah, I would say that we are pretty much going to be finding this as resistance. Now, I said we can push up a little bit further here, right up into that 28K if we needed to, but I just don't think that's likely to occur. Now, the thing that I was talking about the other day was the idea that we might be in an expanding, an irregular flat correction. That would basically happen right in here. You can kind of see right inside there. So again, it's something of interest to me to see how that kind of plays out, but ultimately we'll let those kind of waves deal with themselves, and we will kind of pull that back in as we see it. Now, we're in a B wave movement, potentially over a bigger macro move to the downside. So it's going to be interesting to kind of see how that plays out. Ultimately, I think resistance is going to be found right up here between 26,700 and 28,800. And we'll see how that kind of plays out as well on that macro scale. Now, if I go ahead and throw in, I think it's this one. It's not this one. I'm going to come back to this chart here. Too many charts. Let's see. What have we got? Let's throw this one on. No, this one. Yeah. Let me find it. I know I've got these. Yeah, this one. This is the one I was looking for. There we go. It was on the smart money concepts the whole time. Here we have our 250 EMAs. We can see that the 200 EMA we are above at the moment, and we are just slightly above the 50 EMA. Okay, so the 50 EMA was acting as a bit of resistance, and the 200 EMA was also acting as resistance. So from our weekly time frame here, a weekly close is going to be very important to Bitcoin when it comes to these two averages. I'm not a big fan of averages, but price does react here because a lot of traders will be reacting to the EMAs and the SMAs and the MAs and all that kind of stuff. So when we see these here kind of getting right into the rejection ranges, it's going to be interesting to see whether or not price is going to respect these and go down, close above them. We might see some short-term bullishness and all that kind of stuff. I would say, though, we do see some fake outs from time to time. We can see that right there. So do take it with a pinch of salt. Again, it's not something that we see all the time that we react positively to. Specifically, I think the macro landscape in the economy isn't really going to be giving us that bullish kind of idea at the moment anyway. Ultimately, there's a lot of things to kind of think about and consider. There's a lot of stuff that's potentially going to hit hard over the next few weeks. It'll be interesting to kind of see what the US do, what the Fed do in terms of their interest rate hikes and all that kind of interesting stuff. So let me know what your thoughts and opinions are on the crypto space, on the economy, in the comments down below. If you found this useful, smash that like button. If you're new, then why not subscribe? Don't forget to join us in Discord. And if you're a trader, check out 𝗕𝗘𝗪𝗔𝗥𝗑. Linked in the description below. Until the next one, though, guys, have a fantastic day.